is all about the shareholders. So when the shareholders look, or potential shareholders look at the business books, the first thing they're going to look at is my return ratios, because that's going to give them a little bit of an overview of what to expect. So obviously the first one is going to be, they want to know the ROSHI. Roshi. As they. It sounds very familiar. But let's go on. So this one, it's the return on, and what is she? Shareholders' equity. And what is shareholders' equity? It's the shareholders' investment. What is the return? It's the profit. So we're going to put the profit on their investment and see what the profit gave back to them. Okay? Now, yes.
Is it only one ratio for return?
No. I just need to be sure before I say. I know it's that, EPS, DPS. Yeah, it's 3. Okay. So now, return on shareholders' equity. So return is net profit. Ne? But now I'm asking you, is the shareholder interested in the net profit before the tax or the net profit after the tax?
After the tax.
Why? Because they're interested in how much is available for dividends. You see? So they want to know the net profit after the tax. So, after tax, over half. Now, it's going to be only she plus she. Can you see the difference? Why I highlighted the loan here for you? Because the difference between these two ratios, it's both saying returns. So a lot of times they would ask you to calculate, or they would ask you to comment on the returns. And then you are tempted to quote Rotke, which you don't quote, because Rotke is done for the company. The company does Rotke to see if it's worth his while to make a loan. Okay? The shareholders will look at the Roshi because they want to see if it's worth their while to invest. You get what I'm saying? So they both got different purposes, and that's why I'm saying, remember, this one is the one with the loan before tax, because it's about what did we make. This one is about what can I get. Okay, so get the difference between the two. So that will also be a percentage, right? The other one is going to be the EPS. Now what's the EPS? Earnings per share. So what is the earnings? Now remember, if I'm doing partnerships, remember partnerships last year, I taught you what is the partner's earnings. And we said, oh, it's his salary, his interest on capital, his bonus, and that part of the profit that wasn't declared. In other words, in the end, it's the part of the profit that he earned. Right? Now, if we look at a company, what is the part of the profit that shareholders earn? It's the net profit after tax. That is available for them to share. So it would be your net profit after tax, and you're going to divide it by the amount of shares in issue. You see? Now, if you just do it like this, your answer is in rands. But if you times with 100, your answer is in cents. Now, companies usually, when they show their statements, their financial information, they usually do it in cents. Okay? But it's acceptable to do it in rands as well in our calculations. Just keep it consistent so that you can compare. Okay. Now, I just want to quickly show you something. If I draw an appropriation T account, né? And I have a profit and loss. What is that profit and loss? It's my net profit before tax. Right? Then I pay tax. Then I have my total dividends and my retained income. Can you see that's your EPS? Can you see that? Okay. So now the third one is going to make sense because now I know what is available to share, right? What are we going to do now? Now we are going to compare what did we get. So we're going to have our total dividends over shares, and that's going to give me how much of the earnings did they get. You guys with me? So basically this one tells me there's 100 cents per share available. This is what you earned. DPS will tell you, oh, from that 100 cents, you got 40 cents. The company retained 60 cents. Okay? And now, so in other words, I just want to show you on this guy. Here we go. Can you see? Here it is. Net income after tax over average shareholders' equity. There's the ROSHI. You see? And there's the net income after tax over number of issues shares. That's going to be my EPS. Okay. Then I'm going to see here dividends over shares. This is my DPS. But I want you to see here, and it's very important to see this. So this is your total dividends. But your total dividends is most the interim plus the final. Can you see that? So what they will do, they're going to ask you to calculate the dividends per share. And then before you go and you just take the total dividends divided the shares, you're going to check was there interim. And why is that? Because the amount of shares in issue might be different when the interim was declared than when the final was declared. Remember, usually during the year we issue shares and we repurchase shares. So usually the number of shares are different. So what they usually do is they will tell you the interim shares is 16 cents. Then you know you only need to go calculate the final and add that cents to the interim. Okay? But you'll see, we'll do that. Now you ask me, oh, there's other stuff here. Okay, I can see that. Let's go on. So now I see the EPS is my total earnings. Ne? The DPS is the part of the earnings that the shareholder gets. And that leads to the next ratios. And this, you're not necessarily going to have to calculate. It's more a common thing. And they call this the dividend payout. And they either call it policy or they call it rate.
Yeah.
Yes.
Why is it times by 100, the dividend?
Yeah, it's the same.
Why is it times by 100?
To get your answer in cents.
Oh, not percentage.
No, definitely not percentage. Okay, so your policy, dividend payout policy or rate is just going to be, it's got two different methods. It's two methods. It's not two separate things. We calculate the same thing. So it's either DPS over EPS. Yeah, I want to see the percentage dividends paid out. So from the earnings, what's the percentage paid out as dividends? Right? And now I'm asking you again, if I have my dividends, what is EPS again? What is EPS again? It's net profit. It's your earnings per share. But what is it? It's your net profit after tax. So it's net profit after tax. Can you see they're just replacing the EPS with the net profit after, because sometimes they won't give you the EPS, but they'll give you the net profit after tax. So you've got two different methods to calculate the same answer. We're almost done, so let's quickly do this. So this ratios, can you see they are here? Here they are. Oh, did everybody write their name on the list? Okay, so here, you see, EPS, and I need you to get this in your head. Earnings is net profit after tax. Earnings is net profit after tax. Okay, it's the same thing. Okay, now, I just want to do the last one with you. So the last one that we're going to do is there's going to come a time when we need to do a comparison between the share prices. So we have different share prices. We've got what we call a market. So I'm just going to say here share prices. And the share prices is we've got the market price, which we all know is the JSE price. Okay? Then we have the issue price or the repurchase price. Ne? That's what we issue the share for or what we buy back the share for. And then we get to the one we call the NAV, and I've already told you about the NAV, we've used it. So the NAV is she over shares. Ne? And this is the intrinsic, it's the internal value of the share. In other words, if the company wants to know what is this share worth at this stage, he's going to take his capital and his retained income, ne? Divided by the amount of shares in issue, and he's going to see, oh, this is what the share is actually worth now. So can you see that a company can inflate the NAV by making their retained income more? Ne? Sharp. So can you see that an investor is going to look at this? And it's going to go about, so now when I issue a share, I want to do it in such a way that it's in line with the market price and the internal value. Okay? Because your shareholders are going to look at that and your investors are going to look at that. So the NAV is easy. She overshares. She tells you too much. She overshares. And again, the same thing is, if it's like that, the answer is in rand. If you times with 100, the answer is in cents. Issue price. So it's the issue price and the repurchase price. And here's my beautiful NAV. Here we go. Shareholders' equity over shares issued. There's my NAV. And you'll see here there's one that we didn't even look at. And this is my break-even point. And this is paper 2. We'll look at that when we do manufacturing. Okay. And this is your ratios. So, what I am going to do